Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our analysis of the euro currency. You could see what's going on the markets, and actually the world stands in expectations of some resolving the tight situation, tough situation in the Middle East. So announced response of the Iran for attack on its embassy in Syria from the Israel. It's coming to some dead points, because it was initially said on 48 hours that response should happen. Israel is take the really active preparation for a possible attack. And you could see the corresponding action among the assets. So for example, you could see what's going on in the Japanese yen. Some traders tell that it was intervention, but others also suggest that it might be demand for safe haven assets, safe haven currencies. And you can see also the dollar returns back to the growth. And so you could see on the dollar index 10-year yields is decreasing, although it's no impact has happened yet, no response has happened from the Iran. So my suggestion that Iran, if it will respond, this probably will happen on next week by the two reasons. First of all, this is the Ramadan, this is some saint month for the Muslims, and the end of the Ramadan stands on 9th of April. On 10th of April is a big holiday, so probably hardly Iran will make any attack until this month, special month for the Muslims, will be over. More probable is, if everything will happen, it will happen after the 10th of April. We will see. But currently you can see that some activity started on the markets. So let's return for the technical moments. First of all, on the euro currency market actually has completed two preliminary steps that we have mentioned yesterday. We have got the grabber on a daily chart, at least on the retail broker chart. You could see that grabber has been formed. I am tending to believe with this grabber. It's just because if you take a look at the dollar index chart, you could see that here on the dollar index is also has been formed this grabber, suggesting possible upward action on the dollar index as well. But from another point of view, you can see that, for example, on the futures of the euro, we haven't got the grabber, so it has not been formed. But in the current circumstances, I suggest that probably it has been formed, because we have the confirmation from the dollar index, and overall background for the market performance right now stands in favor of some dollar appreciation, rising on the risk of big conflict in the Middle East. The same we could do, same conclusion we could do based on the 10-year bonds. So you could see that yes, we do not have any activity here, but still you could see that yield slightly has dropped. So from the 4.43 to the 4.30. So some drop in the yields has happened. It also suggests demand for safe haven assets. So this also could be indication of the demand. As for Japanese yen, as for the dollar index, usually when the yields dropping, the 10-year bonds, the dollar also is dropping. But here we have a bit opposite dynamic. So it means that we could follow with our plan. If you remember, we said that if we will get the grabber, when the market will complete the target of the bread and butter trade on the follow time frame chart, we could consider taking the short position based on this grabber. Yes, we have had the payrolls report today. We have the weekend, that everything could happen in this weekend. It's a big question whether it makes sense to take position today. and hold it from through the weekend. And this question, that guys, unfortunately you will have to answer by yourself, because everybody has different risk perception, and for somebody trading payrolls it's just, well, piece of cake, but for the others they prefer to not trade, like me. I do not like to trade when the payrolls report is coming. But bread and butter trade is relatively short, so maybe, I'm not sure, but who knows, it might be over until the payrolls will be released. So on the fall time frame chart, this is the hand shoulders that we yesterday have discussed, and market dropped to the 30% support. It has not been tested totally yet, so market still stands slightly above it, but it's approximately an area that we have discussed for a possible taking the long position with a possible upward retracement. The target of the bread and butter in the current circumstances will be 618 resistance of the downside action. So since we have big bearish grabber, we are not considering scenario where these hand shoulders will work, but you also have options. One market will touch the target, you could make the opposite decision. For instance, you could move stops to the break-even and make the bet that these hand shoulders will work and grabber will fail. As I said, it's very personal. I'm just showing you the potential of this current price performance on the markets, the patterns that we have, but you of course could make your own bets according with these patterns, because everybody from us have some different views, some following some different analysis tools, and view some special things that others can't see. And from that standpoint, for me, I'm considering this from the perspective of the daily pattern, but maybe for you, you could see here some strength, and you could make a bet on the failure of this grabber, and maybe you will be right. So I'm just showing the patterns that exist and share with you my view, so what I'm thinking about it. But of course you could just manage the trading process as you would like to. So on hourly chart, here's what we have. I suspect that it might be the starting of the some bread and butter trade. As I said, the target will be approximately around 155, 618 level on hold downward action. This is not for everybody. It is intraday setup because it has very small potential. Mostly, if you trade on a daily chart, you mostly should wait when the market will reach this area, then see to avoid this type of action. So if we will get this straightforward upward action, explosive performance, it's better to not consider taking the short position by far. But if action will be gradual, slow, something of this kind, that will be the opportunity to consider taking the short position with the daily grabber that we have in anticipation of the possible downward continuation. So that's the simple logic. Here, to make the decision on possible long entry, you could drop your time frame even more. So for instance, if we'll take a look at the 5-minute chart, you could see that we have here some nice wash and rinse of the previous lows, kind of the engulfing pattern. So maybe on some minor retracement here, it is possible to consider taking the long position with the stop somewhere below the 30% support. So something of this kind. But this is only for those who intend to take this bullish trade, scalp bullish trade on euro currency with this in bread and butter. So everything sounds a bit complex, but as you could see, in general, patterns are really clear, that we have head and shoulders, bread and butter, grabber. So, and just follow the correct sequence of the events, and that will make you actually overall situation more simple, starting everything from the bread and butter and then see what will happen. Just keep your eyes open, what the performance will be, how strong it will be. Just manage your risk, move stops to the break even once market starts moving higher, and then follow the situation. When the market appears at the target of the bread and butter, make the decision on would you like to reverse the position with a grabber on the daily chart, or you see the strength and you suggest to keep it a bit longer. So that's actually our job that we have to do, and we can't predict every scenario that might be formed here. We just could discuss it in general with the pattern that stands in place. So that's probably enough for me. Let's keep watching and see what will happen on the payrolls report and what the market performance will be.